Morning, everyone. Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, September the 17th. Well, trade overnight was pretty quiet till recently. Now we're perking up here a little bit. Corn right now is steady to a penny better. Beans up 2 to 3. Mixed in the products, steady to a little lower here in the meal, while bean oil is up 40 to 50 points. And wheat prices have rebounded across all three classes as well. Recovering from yesterday's sell-off, currently about 3 to 4 better. No big changes with yesterday's crop condition reports. Corn conditions improved 1% to 65% good to excellent. We were looking for about a 1% decline. With the updated ratings and last week's ear data in the USDA report, to me it would suggest a yield of 183.6. That's exactly in line with the USDA estimate. Since 1990, there have been 10 years where the USDA raised production in both August and in September, and 5 of those years final production was above the September estimate. With 5 years it was actually below it. So pretty much of a coin flip moving forward. I guess I lean towards a little bit lower given the hot dry finish. We have 85% of the corn is dented, 45% mature, both in line with recent history, and 9% of the crop has been harvested. Bean ratings did slip 1% to 64% good to excellent, in line with pre-report expectations given the ratings and pod count data. My yield's at 53.5, just above the USDA's 53.2. Since 1990, there's only been 4 years where the USDA raised production in August, only to lower it in September. In 3 of those years, final production was below the September forecast. In 1 year, it was above. So a little bit of a tilt to the downside here moving forward. 44% of the crop is dropping leaves. Harvest has reached 6%. In the wheat, spring wheat harvest is winding down, 92% complete, while winter wheat plantings are rolling along here, 14% now. That's versus 13% a year ago, and also the 5-year average. Yesterday, NOPA crush report came out well below expectations. NOPA members crushed only 158 million bushels in August. That was down 13.5% from July and down 2% from August of 23. Expectations were for it to come in about 171 million bushels, which would have been a record high for the month. This would suggest census crush for the month at 167 million bushels. And that's in direct contrast with the USDA forecast last week, where they raised crush for 23-24, 5 million bushels to 2.295 billion. So I look for that to flip that and reduce to 10 million bushels now in the month of October. Bean oil is finding some support from the report, with stocks well below expectations at a 10-month low at 1.138 billion pounds. U.S. weather remains warm and dry through much of the central and eastern corn belt. Got some rains filling in the northwestern third by late this week and into the central plains. Some pretty impressive rainfall totals will help recharge some of the soil moisture in the winter wheat growing areas, but do little to help the corn and soybean crops. Rains are frequent here across southern Brazil this week, gradually expected to move north, but the conditions in the west central parts of Mato Grosso still quite dry. Need rains here by early October to get plantings rolling there. For now, corn seems pretty much content to chop around between 4 and 4.15. Strong demand and harvest pressure seems to be balancing each other out. The speculative position in corn now at short about 125,000 contracts, about a third of the record short here from just 2 months ago. Nove beans hovering just above the $10 level. Here too, improved demand to China, along with dryness in the west central areas of Brazil, delaying plantings there, seem to be offsetting each other. And wheat's most volatile continues being driven by volatility or tensions in the Black Sea. Have a great day, everyone.